Hi, I'm Maciek Zaremba with Sarasota for Sale over at Keller Williams. Today we're going to really talk about what it takes to qualify for a loan. You know, a lot of people are very hopeful of being able to purchase a home and stop renting. And that's a great goal to achieve. However, there's a lot of misconceptions. You know, just because you make $4,000 a month does not mean that you will qualify for a loan. I know it sounds weird. And the industry is just very strict. That's really what it comes down to. After the market crash in 2008, we did have a lot of regulations change, a lot of tightening in the credit application process. So right now, here's what it looks like. First and foremost, I can't stress this enough. This is the repayment ability is the #1 thing that they look at. They don't think about your credit score until they see that you make money and that your expenses are not out of whack. So how do they do this? Literally, what they go is they look at your credit score and check what gets reported on your credit score. You know, if you have a Bank of America credit card for $30 a month, you have a car loan for $500 a month, and you have some sort of martial arts class or something, you're paying $100 a month. They tally all this stuff up, and then they look at how much do you earn. Hopefully it's one job. Hopefully it's on a W-2. That is like the golden rule there is if you are on a W-2, you're going to have the highest probability of getting a loan. But then they check the difference and then they see how much is left over. And they use what's called a housing expense ratio. They want your housing expense to be between 32, 39%. But there are programs out there that go up all the way up to 50, maybe even 55% if you're lucky. So repayment ability has to do with how much can you afford. And it all has to be from one source, for the most part. There are exceptions, from one source. So if you got 3 jobs that you're juggling, part-time, 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 that's really going to hurt you. What you want is one job that pays you a W-2 income. If you're self-employed, there are programs out there, but everything just gets a little harder to qualify. Next is your credit score. That's basically the history of you paying things back. Are you disciplined? That's all it's really looking at. They look at your credit score, and theoretically, you can get a loan with as low as a 580 credit score. Now, to some people that's high, to some people that's absurdly low. But what's really nice is that program is the FHA program. It is a federal government program. Whereas the loan is guaranteed by the federal government. It's really, really nice because it allows people to get into homes when they don't have the most stellar history for whatever reason. Sometimes your history is not always your fault if you don't have a good one. So your credit score is second in command here. Repayment ability first, credit scores next. Try to get up to about 620 minimum. 680 is much, much better. You're going to get a much better interest rate. And if you're above 720, you're pretty much in the top tier of getting the best interest rates, the one that you see advertised out there. Last and not least is your down payment. Now what this is going to do is your down payment is how much percentage-wise towards the purchase price of the home. If you're buying a home for $200,000 and you have $20,000 as a down payment, that's a 10% down loan. And basically, you're limited to your options on a 10% down. What you ideally want to shoot for is 20%. However, we understand that first-time home buyers usually don't have huge stacks of cash lined up, under their pillow or in their bank account. So there are programs, once again, the FHA loan, that requires as low as 3.5% down payment. So that $200,000 home needs a $7,000 down payment. And then most programs are between 3% and 20%. That's really what you're going to be looking at. That 3% is actually not an FHA loan. It's a different type of loan, but it's out there right now. So if you're thinking about buying a home, reach out to me. I'll help guide you a little bit on what you need to first get in the process of being able to qualify for a loan. Just remember, I'm a real estate agent. I am not a loan officer. I will put you in touch with loan officers to get that process started. But due to my experience, all these years in this business and all these loans I've helped people get, I do know quite a bit about it. I'll be here to offer help. If you want to reach out to me, give me a call, 941-400-7084, or you can email me, sarasota@sarasota.com.